Hi again, everyone. This is Joe Henches with Beyond the Chart. Today is Saturday, May 3rd, 2014, and this is Stock Market Analysis Today, Weekend Edition. So we're starting off with the Dow, which was down 45.9 points yesterday. Started to get that sell-off in the afternoon. I think concern about Ukraine as we went into the weekend. I still had some buy signals on some stocks and some sell signals on others. So you're getting a little bit of a mixed bag. It all depends on the sector and the industry. And it's a little hard to tell in here. The scenario I've got in here is we're looking for a fifth wave, okay? And the clearest thing I'm seeing is a potential diagonal type wedge formation. And I first got the clue to this when I was looking at the S&P 500. Let's go to the weekly on the Dow for a minute. You can see it a little bit clearer in here, kind of a wedge type formation. We're still trading above the 10-week moving average though. But we are, I believe, getting divergence. I know we are, yes, we are getting divergence in here on the weekly basis. So it's telling you that, yeah, we're hanging sideways, slightly pushing up. So we'll just have to see whether the divergences disappear or whether they indicate that it does roll over. S&P 500, again, this is a little bit of a wedge formation. Now these lines are drawn right across the highs in here. We've got this little trend line in here that if it breaks, as I mentioned, we're going to come down and test this trend line. Let's take a look at the Nasdaq. The Nasdaq is still trading below the channel in here. Still got lower highs, and now we've got our first higher low. So this is going to be interesting. Is this forming a like a pennant or a little wedge-shaped triangle as a consolidation, or are we going to break to new high in here? Not new high, but a higher high. So that's what we'll have to watch for on the Nasdaq on a weekly basis. We continue to trend below the 10-week moving average. This is the sixth week below the 10-week. We now have the 10 breaking below the 21. Last time it did that was back over here November 2012. But then right after it did it, it started to rally a little bit, go sideways, and then kicked off the big move for 2013. So we're just going to have to watch to see, does support start to come in here? The next one, let's take a look at the New York Composite. Not nearly as bullish a week on the New York Composite. So we've got, well, this actually is a daily chart. So yesterday was weak. So we've got dojis in here, back-to-back dojis, Thursday and Friday. So again, very indecisive type action, kind of compressed type action. And again, you've got this trend line. This short-term trend line over the last 3 to 4 weeks. And the Russell 2000, again, this is almost a mirror image of the Nasdaq. And again, another small doji in here with this doji on Thursday. Trend lines are clearly down on the 21-day, and the 10-day is down below the 21. So, I mean, we've been in this downtrend. So the question is, are we pausing and having consolidation in here and going sideways and then break further down? That's what we're going to have to watch to see. Okay, let's move on to some of the indicators here. Short-term index, where are you? Short-term trading index. This is hanging in the neutral area. I mean, we're not getting the extremes, so it's not helping us at all in terms of that. When I look at the VIX, and the VIX, look at 1, 2, 3, 4, 5 days in a row straight down in terms of dropping. Now I'm starting to look at this RSI on the VIX, and this has gone to a new low. So we're not getting bullish divergence, not like we got back here in early January, where we did not go to a lower low when the VIX dropped in here, and an indication that the VIX wanted to go up. And notice how we got the divergence here. So I'm going to start watching for the divergences to give us a heads up on what this VIX is actually doing a little bit more. And right now we're not getting a signal. So that's one thing. I mean, if I was getting a divergence, a bullish divergence on the VIX, I'd be really cautious that the market's getting ready to tank. Now that doesn't mean this can't turn around, but that's one signal that would help us make us understand that maybe something was coming. Now you look at the high-low index, the net new highs and versus new lows. And again, we're in this, what I'd call a little channel, downward channel in here, kind of a compressed consolidation, and we haven't broken out. It looks like it wants to move towards this trend line, and if it breaks out of this trend line, it may indicate that we're heading to the upside. Let's see, the next thing we want to look at, let's go ahead and take a look at some of our ETFs in here. The semiconductors, let me blow this up just a little bit. Semiconductors they're barely 0.07 up, so they're really unchanged on Friday. And again, we've got this support line in here. It kind of looks like a little shoulder, head and shoulder, but the symmetry doesn't look that great, so that makes me think, well, I'm not so sure that that's really the case. But we do have this support down in here that it got when it got down into this area. So I think that's going to be the key thing. If it continues to push down and breaks this, then it could head down towards the 233-day moving average. So the next one we'll look at is the home builders ETF. Home builders has bounced, and I think the interest rates have been moving down a little bit. I know the bonds, long-term bonds, been rallying. And so that's could be what's causing the home builders to rise up in here. I'm not really sure, but again, this is support. This is where it got support here, got support back in here these 2 days. And it's kind of interesting to look at this pattern. A little spike support intraday, comes back down and retests. Spike support, comes back down, retests, now it's rallying. So this could be getting ready to go. This might not break down, but again, this is what we'll have to watch for. Does this really complete the fan line move to the downside, or do we take off from here to the upside? And the next one is the XLF. I want to look at the financial ETF. And this intraday went to a higher high up in here. But then sold off, and I was watching Goldman Sachs pretty closely because it got real close to a stop on the put position I have in Goldman Sachs. Didn't quite hit it and turned right around and sold off, and we'll talk about that tomorrow. But this one again, we've got this upward slanting line in here that is just, to me, it's looking like it's begging to be broken, but we'll just have to see whether or not that plays out. Or we need to get this taking out the lows of the last 2 to 3 days and trading below the 10, and right now it's trading above the 10. So the XLF is trying to push higher. We'll see if it continues to do that. All right, now the 3 stocks I'm going to look at today, we typically, last few weeks anyway, well, we've always been looking at Apple every Saturday, and then we started adding Tesla, and I'm going to look at Amazon today. So Apple, Tesla, and Amazon. And let's see, where is Apple? Here we go. All right, now, I know we've had this huge move in here, big gap, big volume. I just still have a hard time getting out of the bearish mode, and I'm not sure why that is. And I'll tell you in a minute why. There's a couple of things. I keep seeing this overlapping, okay? Even though this is the low point, if I try to make the case that this is an impulsive move heading to like a whole new rally, this would be wave 1. This would be wave 2. This would be wave 3. Well, wave 4 can't overlap wave 1. So that can't be wave 4. So then this would have to be a wave 1 of a wave 3. You start going to the lower level. Well, then you get trapped in the same scenario again. It's overlapping. So when I start seeing overlapping waves are corrective waves. So this leads me to think that we are still in a corrective mode because the waves are overlapping. They're not impulsing. Look at this impulsive wave. Okay, those waves aren't overlapping. Okay, this is correcting. These waves are overlapping. Okay, and so you can see this was an impulsive wave. You had a little bit of overlap here, but for the most part, when you're in an impulsive mode, these waves don't overlap. This is like a correction. This is one correction here, but that was the only time it overlapped. The rest of these keep moving to the upside. So when I start looking at this, and then the other thing that makes me think that this is what's happening is when I look on a weekly basis and I say, okay, well, let's look at Apple on a weekly. And look at, this is the entire history of Apple from 1980, okay? And this is on a weekly chart. Well, you know, you can kind of make out the waves back in here. And even if you didn't, I mean, from this day when Steve Jobs, you know, started back at Apple as CEO, right in here in July 1997, it had that 5-wave move that was the move that made this stock. And when you look at the numbers, this number, because this is on semi-log graph, where I have this line, this horizontal line, that is $100 a share. Now this is all split adjusted naturally for the history, but that's $100 a share. Okay, so we have been above $100 since what, 2006, 2007, and had a heck of a move. When you look at this on, if I adjust this back, take off the semi-log and take a look at this on just an arithmetic scale, okay, you can see the spectacular blow-off spike that Apple had. So it's real hard for me to get super bullish right in here after, yes, we had a correction, but it almost looks like we need an A, B, C bounce, like a zigzag type correction. So that's what I'm, you know, that's what's kind of gnawing at me. That's what's pulling at me. And then when I start looking at the, you know, you come back and you look at the Apple daily chart and see the overlapping, it makes me think we have a complex. You know, we had a zigzag in here, an A, B, C, and then we had this move here, which is of an A, B, C type move, an X, what we call an X, and then we're getting another zigzag, an A, B, C. Now, I think we might have a little bit more of a move. We might push up to around 610, 605, but I think that's going to be about it. And when I make that estimate, and then I'm going to get off of Apple, but when I make that estimate, I'm looking at the length of A and take it back down to the bottom of B, and at 161.8%, we're at 605. Okay, so that would be my initial target on this for the high on it. So it'll be interesting to see how this plays out and how the scenario, how Apple trades over the next couple of weeks. So that's what I'm looking for on Apple. And if we go to Tesla, Tesla has been still trading to the, you know, in this downtrend, kind of a gradual downtrend, a very slow paced, but definitely lower lows and lower highs. Now we had the first change in here also, so it's similar to what's happening on the Nasdaq and the Russell 2000. But again, we need to get, you know, move to the upper side here and break this trend line, which it may be starting to do. If you draw a trend line in here, slight break on Thursday, and a little bit of a close above it. So we may be starting to get that type of a move out of it. But other than that, it's hard to tell. I mean, I think it may be just nothing more than consolidation going on. You're not really getting a whole lot from the indicators. You were getting some bullish divergence in here on the RSI, but that's really about it. And that was back for this move right down in here to cause this kind of move. All right, and the last one we take a look at is Amazon, and Amazon's getting some bullish divergence coming in. I mean, you can see it in here. Let me get off the crosshairs. Okay, the RSI or the DI minus in here did not go to a new peak when this went lower. Okay, so that's bullish divergence. The RSI did not go lower when this went lower, so that's bullish divergence. And I think the same thing is happening right here on the demand index. So this tells me that we're getting some bullish divergence on the indicators on the price. Now we need to see price tell us it wants to go the high side, because right now it's in a pretty solid downtrend. And we're going to need to get this trading above the 10. We're going to need to get higher highs and higher lows type of action in here. And we're going to need to get some trend lines broken before you can get really excited. Otherwise, you get caught in a bull trap. Because just because you're getting bullish divergence, sometimes when you get into these really strong downtrends, you'll get bullish divergence for 1 or 2 times before it actually turns, and sometimes more than that. So I'm just saying that just because, just be wary of that. You need to let it prove. Don't rely just on the indicators. You need to have more evidence that you need to have the price action confirm what the indicators are telling you. So, all right, the video's gone a little bit long today. Wanted to make sure we're covering some of these things. So that's about it for today. We'll be back tomorrow with trade ideas. This has been Joe for Beyond the Chart. Thanks for stopping by. Have a great weekend, everyone.